as they continue to remain outside the ambit of the India-US trade talks, with farmers' interest and the ethanol blending program not open to compromise, is the word coming in from the ISMA spokesperson, Mr. Deepak Balani. What are going to be the implications of this on some of the companies back home? Let's get a word straight from the management of Balrampur Chini Mills. We have Ms. Avantika Saraogi, the ED of Balrampur Chini Mills, joining us on the show. Avantika, hi, morning, and thanks for your time. Now, this entire fact that India's sugar and ethanol sectors remain outside the purview of the India-US trade deal, how are you reading into this? Is this a positive or negative for the sector? Help us break that down.
Hi, thank you so much for having me. Good morning. And thank you so much for that question. I think it's important that viewers understand. So definitely, ethanol and sugar remaining out of the India-US trade deal is definitely a positive for the country because it ensures farmer security. The whole point is that sugarcane price is set by the state and central government of India, and if it is opened up to the US, then that could jeopardize the price of the incoming goods would be a little cheaper than what the Indian goods are, and that would jeopardize farmer payments. So it's a very good thing. I think the government has been very pragmatic and to keep this out, and we would really benefit from it.
Okay, so while this you're reading this as a positive development, Avantika, now that ethanol and sugar have been explicitly excluded from this India-US trade deal, how do you assess the pricing impact could be? What could this do to prices back home in the near to medium term?
So let's talk about sugar first. So sugar is basically insulated for the country, and it always has been. Indian sugarcane is sometimes 1.5 times more expensive than sugarcane abroad because they have larger scale farming. We have small holdings. We're not able to take the yields. So therefore, also Indian sugar is usually more expensive than global sugar, and that is still the case now. And even though production season is in full swing, the sugar prices are holding quite good, and we are very, very happy about the trade deal not having this part in it. And then if we come to ethanol, what happens with ethanol is that, again, because of the input price of sugarcane being higher than global ethanol input prices, Indian ethanol is also more expensive than global ethanol. Now, the government had been revising ethanol price annually every year due to their consequent increase in the sugarcane pricing. But in the last 3 years, the government has refrained from increasing the ethanol price and kept it flat for the last 3 years. So this is, of course, this is not very good for the Indian sugar industry, but we hope that the government will look at it and in the next term increase it again.
Okay, so that puts a lot into perspective. Avantika, while we're talking about the availability of sugar back home and the impact it could have on pricing, how are you viewing Centre's decision to permit an additional 5 lakh tons of sugar exports for this season, and what could the impact be?
So I think it all ties back into the previous question as well. So until and unless there is export price parity, nobody will physically export sugar from India. So at the moment, Indian sugar is selling at a higher price than global sugar, and this basically makes it difficult for any physical export of Indian sugar going out. So it is an enabling measure. It's a good measure by the government for the industry that in the event there is sugar parity, we did have a higher stock last year, so we could liquidate some of that. It's a good move by the government, but the material impact is close to nil for the physical reality.
Okay, and Avantika, shifting focus from the broader ecosystem to your company now, despite the increase that we've seen in SAP from 370 per quintal to about 400 rupees per quintal, your sugar segment performance has continued to remain strong. Help us understand what pricing levers or operational levers are underway that are helping you offset this higher cane cost?
We have been working on our sugarcane variety, on the quantity, on everything relentlessly over many, many years. And us outperforming is sort of, I would say at least 50% of that goes to our sugarcane management, whether it is helping with the disease, pest, insect, whether it is varietal balance, whether it is cultivation, increase of yields for farmers. Everything everything of that sort, I think at least contributes about 50% to this outperformance. And secondly, sugar pricing is holding well, like what I said. So usually what happens is that once the sugar crushing season begins and is in full swing, because of the influx of new sugar in the market, usually sugar prices become muted. But this time we haven't seen that, because the initial prediction of sugar net of the ethanol has reduced a little bit. So the sugar prices have held strong. So A, we are being able to utilize our capacities better because we have been working with farmers since many, many years. And B, we are getting a good realization on sugar as well.
Okay, and also talk to us about the current execution status of your 80,000 TPA PLA plant, whether the commissioning remains on track for quarter 3 of next financial year.
Yes, so the plant is absolutely on track. Actually, it's the main focus of the day for me, and it is well within time. All of our imported equipment, 90% of it has already reached India, and the remaining 10% is already in transit. So that is a very encouraging, news for us. Plus, of course, Indian manufacturing is well on track. Everything is sort of gearing up for the October commissioning as promised way back in Feb 24.
Okay. Thank you so much for coming in and speaking with us.